Assalamu Alaikum everyone, welcome back to another video. I hope you're doing well today. So recently I've been interacting with a lot of you, trying to answer some of your questions, and it's great. I mean, I really appreciate the fact that I've always said after I finish a video, I always say if you have any questions, let me know, and inshallah I'll do my best. Whatever happens, I just want you to understand, please, okay, that whatever advice I give you, whatever I say, I'm just saying it from the perspective based on what I know already. I'm not a financial advisor, so it's what I would have done. So if you ask me a question, I will genuinely tell you what I would have done. If I don't know anything about it, I'll just tell you. So a lot of people have asked me early on about stuff about penny stocks and whatever, and I've always said I really do not know anything about penny stocks. I don't own any. I've never bought one. So I'm not interested in that side of the stocks that are basically trading in pennies. I'm interested in more blue chip, kind of companies that have been around for a long time, possibly pay dividend, this and that. I've always been transparent, okay? So when you ask me a question, if I give you an answer, then that means it's basically what I would have done personally, but that doesn't mean it's financial advice. So please be careful, okay? One of the brothers, AA, have asked me a question recently, and I've been thinking about it last couple of days. His question was, he basically made, obviously 2020 was a great year, 2021 was amazing, the stock market. He bought a couple of great stocks maybe that made, I don't know, 20-30% up this time, right? And he's worried about a crash. So basically, I'm paraphrasing what he was saying. So he said, I'm just worried a crash might wipe out all my gains, so I might as well take profits off the table while I can, ? And I thought, okay, that's great. And I've answered to the best of my ability, and I've talked about what I've done before. So I just wanted to do a video, just a quick video, just to kind of explain when to sell stock. Okay, and not only that, just tell you exactly what I've done. So based on the research, and then what I would have done if I was in his shoes. Not long ago, I was in that brother's shoes. I probably am right now as well. Tesla, I had over 10 shares at some point. I can't remember, was it 12 shares, 11 shares, whatever it was, right? I've been selling Tesla since day one, and I will show you right now. Okay, I had 10 shares. What you will see here is sold. Okay, I've been selling Tesla for a long time. I've been buying it as well for a long time. So my first purchase on Tesla was 21st of April 2021 when I bought one share for £575. From there onwards, I bought a few more, and then I've been selling it. I've been trimming to the point where now every time, look, this sale made about 100 something pounds. This one 150, this one 130, this one made 230 pounds, this one made 230 pounds. So every single sale that I've made, okay, I think majority of my money the gains that I have probably came from I'm talking about realized gains, not unrealized, okay, came from probably Tesla, and some of it came from Apple and so on, because I don't really normally sell stocks, okay? So yeah, personally, brother, I would take some profit off the table. Why? Because Tesla is a very overvalued stock in my opinion. It's great company. If you made over 50%, it's not bad idea to take some things off the table and buy, maybe like you said, stable dividend stocks that will basically be around and can sustain some sort of a recession. That's just my advice, okay? But let's now look at based on the research. So if you bought, the flip side is you also have some stocks that you actually feel like, should be sold or whatever, because it's gone down 20%, 30%. So let's have a look at some of those companies that you could potentially own. And I'm not just talking to the brother, generally I'm talking to everyone right now, including myself. So if you bought Zoom about a year ago, right now you'll be down about 47%. If you bought Square, okay, I know it's not Sharia compliant, but if you did, okay, you'll be down about 25%. If you bought Alibaba, again, a non-Sharia compliant company, although my friend tells me it is, okay, you'll be down about 49%. If you bought DocuSign, you'll be down right now 30%. But if you bought Tesla at the beginning of the year, you will be up 46%. So in this kind of situations, what do you do? If you've done 40% or almost 50%, or you're up 50%, what should you do? So according to, so the website that normally I use is called Investopedia. And this is where I went to find out when to sell stock, for example. And I'll summarize it, okay? So when the initial buying decision was a mistake, so what do they say? What they're saying is you bought a stock, okay? So there are two reasons, okay? It could be intrinsic reasons. You bought a stock, it's now, you made a mistake. You basically, it's not the same company that you thought about, or you realize something is not great about the company, then obviously you can sell that, okay? So it could be a meme stock that you bought and so on, okay? So it says, the best course of action in this scenario. So the scenario is you've watched this stock, like a meme stock, going up every day, 20%, 30%, but then you bought it. And then as soon as you bought it, what happens? It goes down. What do you do in that situation? Get your money out as quickly as you can. Basically, that's what Investopedia is recommended. The second thing is this one. When the price rises dramatically, there's a couple of reasons why that could happen, okay? And this is really important, okay? If the sales are going amazingly, everything is good, the earnings is great, then don't sell that. It did happen to me, and that is one of the companies that I own, Qualcomm and Broadcom, for example. Both of them were undervalued so much. Right now, I was almost I'm 50% up on this one, and the other one I'm up about 30-something%. The stocks went up because basically people have realized, the investors have realized the companies are worth more. So for that reason, keep that stock. But in other cases, so in price might have posted a phenomenal gains because of its speculations. Because someone decided to short squeeze or is already you know, on Reddit or whatever, and people are buying it because they don't even know this stock. They're just buying it for whatever reason. When the price goes up to the valuation that you like, okay, then sell it. Because what's going to happen is it's going to go back down again. But if it's something to do with the fact that, again, this might be a good thing for you. If the price goes up to 20%, 30%, then perfect. Take some profit, sell what you have, and then wait for it to come back down. So when the short squeeze is over, okay, when people are no longer shorting that stock, when people are no longer talking about on Twitter and Reddit or whatever, then maybe that's a good time to buy it back again if you like the business model and you like everything about that business. The next thing is when the stock reaches your price target, okay? And this is more for traders, I'll be honest with you, okay? But again, it's fine. So when if you've owned this stock and it goes before, so for example, you owned Alibaba for a while, okay? Here around, basically this question can help basically expect you to know how to read graphs, for example, okay? Stock charts, basically. So what happens is there's a break point sometimes. So if we go back to, for example, Tesla, okay? So Tesla has been trading about £50, 500 something for a long time. And it got to about here, it started trading about 600. From there onwards, it just went up massively. So what happens when stock's been going to, imagine from 500 to 550, then back down to 500. Then it goes to 600 and it comes back to 500. Next time it moves from 500, okay, what normally tends to happen is it breaks a barrier and it doesn't stop for a long time. It goes all the way to 700, 800. Same thing could happen. If it's been going down to 500 and going back up, next time it goes below 500, it could go up to 200 to 300. Okay, and that's basically what they're talking about here. So when stock reaches your price target, okay, and you had a price target in mind, just sell it, get out of it. Okay, again, similarly, it could be the fact that you bought a stock and your price target from day one, you bought a Tesla, your price target was $1,000 per share. You hit that 1,000, take your money and go. Don't be greedy. Okay, that's if you are scared and you're not sure, because it's better to have a strategy than not to have a strategy completely, because when something goes wrong, you're going to regret it later on. Okay, I do have strategies for majority of the stocks that I own, and that's just to buy and hold forever. But there might be one or two stocks. For example, if I see Tesla, I've always said I will sell Tesla at some point. Okay, but if it ever comes back down to earth and where it's supposed to trade, okay, is like just the rest of the stock market, the PE ratios that are reasonable, then I will buy more, because I do love the business. But the fact is, it's basically too expensive right now. Okay, so let's go back to the next point. So when a stock trade is at the technical inflection point, so that's basically what we were talking about. Okay, so that's when it hits to a certain level. When stock hits, for example, your target, you sell it. When it hits basically the inflection point, okay, like I said, that's more of a technical analysis, okay, that you also sell it. The next thing is when the fundamentals deteriorate. And this is really important. So if you bought a business, everything was great, and all of a sudden, the guidance, for example, for the next couple of quarters are saying everything is going to be doom and gloom. Get out of it. Sell it. Okay. I looked at a couple of companies that I used to own before, including Intel. Intel was basically one of the stocks that I used to own before I started YouTube. I lost a little bit of money. I wasn't worried about it. In fact, let me just see if I can find it and I'll show you. Right, as you can see here, I used to own Intel. I sold it. Straight after I sold it, actually, they paid me some dividends. But I had, I think, about 15 shares. I sold it all. I lost the £43. Okay, if I had waited for a year, I would have made more money and probably sold it. But at that time, I was too scared. I was new, and I thought, you know what, this thing is not gonna, it doesn't have a future. I sold it straight away. I took my money. Okay, so it's not a bad thing to take basically your savings. Even I think I took that money and I put it to Tesla. I think I did that. I actually took that money and I put it to Tesla at the time, that 500 something, or Apple, I can't remember. The reason I did that, I knew I can get that 45, 50 pounds in just a couple of days with these couple of stocks. Okay, and I did that and it worked out for me. Okay, the next one is when a rival company issues bad news. Okay, a rival company issues bad news, so often the problems affecting some specific sectors be highlighted when the bellwether company is a sector's reported earnings miss. So what happens is, if a company in the same sector, okay, reports a bad situation that's going to affect the whole sector, then that means obviously it's not a good time. Then get out to that stock. Finally, and this, I'm not saying this is according to Investopedia. Okay, so when the market looms wobbly, and you can't time the market. Obviously, it's not easy to time the market, and some people might say that's right now. Okay, I don't know. Only Allah knows what's going to happen tomorrow. But if there's some sort of financial earthquake coming up, then you know something is like when, for example, when the stock market went down or just about to go down, or you knew, say, for example, early January of 2020, COVID is coming and it's going to hit hard, then maybe that's a good time to take your money out and then basically wait for the crash to happen if you believe that's going to happen, right? So according to this website, this is what they talk about. Now, same thing, Peter Lynch talks about the same things. He says in his book called One Up on Wall Street that we've talked about a couple of days ago, when to sell slow growers. He says sell them if they are up 30 to 50% or the business goes basically deteriorates. Okay, if something is not going well, then sell it. If you're up 30 to 50%, and this is the slow growers. If you don't know what this means, have a look at the video I've talked about the other day about different books and so on. The stalwarts are if the PE, for example, is 15 and there's other companies in the same industry, same quality, that are selling for less, he says take your money and put it into these companies. Cyclicals, if I can say the word, costs have basically started to rise, meaning if the raw material that they need to make, okay, to buy the actual raw materials, whatever, for them to make the products they need to make is going up, then maybe that's a good time, because they're not going to make a lot of money. If inventories are building up and no one is buying them, that's again another basically problem. So again, he says sell it. Fast growers, Same store sales. So the example that he used here was Gap. So the business called the Gap, the shop basically that sells retail shop. So he says the same store sales are down 3%. Remember, the fast growers, they're growing about 20 to 30% every year. But all of a sudden, something is not going well. Is the store sales are down 30% in the last quarter. Okay, you might wait for one more and then see if it declines again. New store results are disappointing. Okay, and then people start leaving the business. That's a time to sell them. The best time to sell a turnaround is basically once that has happened. Okay, so once the company turns around and the business is now better, then that is the time to sell, because that's what you've been waiting for. And that's it. That's all you need to think about. I mean, in terms of when to sell things, that's it. So based on Peter Lynch's book, this is what he says. Sell these types of stocks when some of these things happen. According to the Investopedia, intrinsic reasons to sell are this, and some other reasons, okay, extrinsic values to sell, reasons to sell a stock is financial reasons. So you want to rebalance your stock, for example. Okay, so what happens? Sometimes I used to have Tesla. At one point, it got to, so if I go back to my portfolio, okay, at one point, I think it was about 15% off over my portfolio. What did I do? I start selling it to bring it down, because I didn't want to have one stock to be more than 10%, especially the top holdings. Okay, I didn't want them to be more than 10%, so I start selling them. So that's basically rebalancing. Okay, and lifestyle reasons, it could be the fact that you're about to purchase a house, you've got a new baby coming up, some basically coming soon, InshaAllah. Something is going to happen in your life that might need a little bit of capital. Therefore, definitely take that money out. Okay, so these are some of the advices that I would have given myself to. This is one of the things that I have looked at when I first started investing, to understand when to buy, when to sell, why you should sell, why you should buy. So, brothers and sisters, if you are in a situation where you made 100% on a stock, it's never, listen, no one ever went broke by selling, obviously, taking out profit. Okay, if you want to take some, money off the table, do it. Okay, this is not financial advice. That's what I would do. Okay, if I was worried about Broadcom, I would literally sell £800 worth of that stock. I'm not worried, and I know it has the potential to go up. If it goes down more tomorrow, I will buy more, because I'm looking at next 10 to 15 years. And that's it. And if you can have that mindset, inshallah, you'll be fine. I hope that was helpful. Okay, and like I said, please, 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 don't take this as basic financial advice. I'm only some random guy that's just trying to learn about the stock market and sharing his journey. That's all I am. Okay, so I hope you find some value in this video. If you did, please give it a like. Okay, if you lasted this long, then that means you're actually enjoying the video. So please give it a like. It really helps our brothers and sisters to actually discover the videos. So I hope you have a great day. I'm going to do another video, inshallah, tomorrow as well. I've got a bit of time now. So as you can see, I'm trying to be a bit more regular and just share. I've got so many ideas, so many things I want to share, but I haven't had the time. But because now we got a little bit of time of work, alhamdulillah, I can do these things. I hope you enjoy your day. Take care. Assalamu Alaikum.